Market crashes have been happening since markets existed. And over the years, there are many key indicators that flash warning signs in which people can get ready for a potential crash and even possibly make money through it. Some of the 4 different things that I've noticed throughout the years is this. The first thing is liquidity starts tightening. This happens when the money dries up. One of the biggest market crash catalysts is when the Federal Reserve or the government makes moves to restrict liquidity. Essentially, this means money flows less abundantly to the financial system. And what are things that cause that? Well, first of all, what comes to mind is the Federal Reserve will raise interest rates, which essentially makes borrowing way more expensive and hard to do. Or the Fed reduces its balance sheet, which essentially pulls money out of the system. Or the government cuts spending and raises taxes, which means less stimulus for consumers and businesses. And you can see very quickly how that can impact you or I. I'd like to give you some recent examples of that. At the end of 2021, the Federal Reserve stopped printing money, almost exactly when the S&P 500 peaked. From that top, the market fell 27%, with even worse losses in tech stocks. The second sign is euphoria and FOMO. This is when everyone thinks that they're a genius, and if you go in an Uber ride, the guy's gonna tell you how he's made loads of money in a particular stock that everyone is talking about. Market crashes do not happen in fear. In fact, they actually happen in excitement. This is what it looks like. People believe prices can only go up and ignore all the risks that come along with investing money in financial markets. And this leaves everyone to the fear of missing out and chasing these overextended trends. For example, the NFT mania, where we had monkey JPEGs selling for millions of dollars before collapsing. Or better yet, for my boomers, the 2006-2008 housing bubble, where people were basically over leveraged, assuming housing would only rise forever. Even before that, 99 to 2000s, investors were unloading all of their money into internet stocks with literally no profits, just ideas. A very easy tool is the Fear and Greed Index. This will show you the overall consensus of where people's minds are at and where they think that the market is headed. Another sign markets are well overextended is when people start making something called idiot money. And the reason why they call that is because this is when people with little to no investing knowledge start making millions of dollars and then start flexing all of their profits. I know it sounds cliche and it sounds funny, but it's a real thing. A lot of the times you'll see a lot of Discords popping up, Telegram chats, and different chat rooms where people congregate and talk about how they're geniuses and things that they're picking. But what's happening is they're recruiting everyday people, which cause more and more money to flow into these scams and overhyped things that just cause it to go higher and higher and higher. We have all these meme stocks and meme coins just completely exploding, like GameStop or Dogecoin. While many got rich, even more got poor by losing it all because they never sold anything. And yes, I am victim to that as well. This is why I make these videos, to talk to you guys about what not to do, because I've already done it. To identify if you're falling victim to that right now, make sure that anything you're invested to has real fundamental backing. Now, lastly, this might be the most important thing to look for when it comes to identifying a potential upcoming crash, and this is illogical valuations. Before a crash, stock prices typically detach from reality and start trading at insane valuations that can't be justified by actual earnings. And this is what it looks like. Companies make little profit but have sky-high valuations. Stock prices, like the tech bubbles where investors believe that it was different this time. It's different every time. A recent example is the AI stocks in 2024. Let me show you what I mean. PLTR versus AMD. When we just look at these stocks' PE ratios, you had PLTR at a ratio of 5.99, and then you had AMD at a ratio of 10. And when we look at those two, AMD was valued at $180 billion. Meanwhile, the other was valued at $267 billion, but AMD actually made more money. So how does a stock that doesn't make as much money as another one be valued higher? Irrational valuations. And it's really easy to spot this. Just check for the PE ratios of stocks. With all that being said, what could you actually do when you start seeing these signs and you want to do something about it? Well, you need a market neutral strategy. This way, if we do continue in a bull run or we go into a complete bear market, you have a way to actually perform during that time. And that is exactly what I have found to be true by leveraging this trading software. In fact, if we look at the month of February, all of these assets were down. Meanwhile, my machine learning trading software made me well over 5%. So if you do not have any market neutral strategies that could potentially help you perform, then that's the first thing I would do. The second thing I would do is consider taking my profits and going into cash. Because when you're in cash and markets do roll over, then at least you have some dry powder to get back into the market with much larger positions, because whatever you're holding has came down significantly. But again, the risk in that is if you do go into a bull run, then trying to get back into those positions will only yield you far less than what your original position was, because now you're buying in at a higher price. While this can be effective if you're right, it's still a little bit risky. It's very easy to find a market neutral strategy in today's investing landscape. In fact, it's so easy, if you just hit the description, you could find out more about these strategies. Make sure to subscribe so you know exactly what to do when the crash comes. Peace.